Hello, everyone. It's Sid here from Fundamental Research, and our guests today are Ben Louis, the CEO of Yorkton Group, and Reg Lianage, Executive VP. We had initiated coverage on Yorkton back in June. Yorkton is building out a portfolio of cash-flowing multifamily residential properties in BC. Management is targeting to grow the portfolio to over $500 million within the next 3 to 5 years. I should note that the currently low interest rate environment is very conducive for property acquisitions, and management expects to take advantage of the currently low rates. So the agenda for today is I'll kick off the call with a few points on why we like the multifamily rental sector, and Reg will take over from there and introduce us to Yorkton. Ben will also be on the call and to answer any questions you may have after the presentations. Here are some key disclaimers. Please take a moment. All right, so let's get started. So we believe the multifamily residential rental market is one of the most attractive markets in Canadian real estate in the near term. Now, I have 4 reasons to say that. The number one reason is what you're seeing in the chart here. It's record high home prices. Prices were up 14% year over year in Vancouver and 13% year over year in Toronto last month in July. The sales to active ratios in both cities remain at elevated levels. Vancouver is at 34%, Toronto is at 96%. Now keep in mind that markets with sales to active ratios over 20% are considered to be seller's market, meaning prices are at elevated levels. Now, my second reason for today is historically low interest rates. Although stress tests are in place, the low interest rate environment has been a major driver of demand and prices of residential properties in the near term. Reason number 3 is record high rents and low vacancy rates in key cities in Canada. Now, this chart here shows that the average rent in Vancouver for a 2-bedroom is at $3,000 a month, which is a record high. And number 4th and the last reason for why we like multifamily, especially in this current environment, is the expected surge in new immigrants and international students. Now, these two categories, I should say, new immigrants and international students, a lack of this had negatively impacted the country's rental market last year. We are expecting demand for rental properties to rise in the coming 12 months, especially considering the successful rollout of vaccines. Note that Canada is one of the most highly vaccinated countries in the world. About 65% are fully vaccinated and remains one of the top destinations in the world for immigrants. So we are expecting a surge in new immigrants and students once conditions normalize later this year. This will result in a significant increase in rental demand. In addition, the federal government has increased its immigration targets for the next 3 years to make up for last year's decline due to the pandemic. With that, I would like to welcome Reg, Executive VP of Yorkton. Reg, you'll be able to share your screen. Please go ahead when you're ready.
Okay, thanks, Sid, for the introduction. Okay, so I'm going to play a short video. It's basically who we are, what we do, and then I will start my PowerPoint presentation. The video is only about 1 minute.
Yorkton Equity Group, YEG, is a growth-oriented real estate investment company committed to providing shareholders with growing hard assets and stable income through the accretive acquisitions of multifamily residential properties. YEG deploys an aggressive acquisition strategy guided by our conservative investment philosophy and strong financial management, with the objective of providing shareholders with growing net asset value and earnings. YEG is built on the solid foundations of the Yorkton Group of companies with strong financial capacity, having been in business for well over 30 years. YEG has an outstanding board of directors and management team with strategic vision and extensive experience in the real estate field. Yorkton Equity Group, poised for secure, stable growth to deliver an outstanding value proposition for shareholders.
Okay, so tell you a little bit about Yorkton Group. We've been operating as the Yorkton Group since 1989, so going on over 30 years. And the Yorkton Group of companies, we do everything from construction to condo conversions to land development, redevelopment, commercial leasing, commercial brokering, hotel operations, etc. We felt that the next evolution of the Yorkton Group of companies was to have a public company in the portfolio. And to that end, we set up the Yorkton Equity Group and we started trading back in November 2020. Now, even though the Yorkton Group of companies is highly diversified, the Yorkton Equity Group has a very focused mission, and that is to buy and hold investment-grade multifamily rental properties in its portfolio. We may have the odd one or two projects that are commercial, but I would say probably 99% are focused on investment-grade multifamily rental properties. Okay, and before we go any further, I just want to emphasize that the Yorkton Equity Group is not a REIT, okay? And the reason that we're not a REIT and we have no intention of becoming a REIT at this point in time is that REITs typically have to pay out 90% of their pre-tax income as dividends. In our case, we want to take all of our profits and reinvest that back into buying multifamily rental properties. So we're really laser focused on growth. We want to rapidly increase the net operating income as well as the net asset value. Okay, and as I said, our focus, perhaps 98% to 99% of our acquisitions will be multifamily rental properties, and we want to achieve rapid growth of the net asset value. So basically, we are an aggressive growth. So we deploy an aggressive growth strategy, but at the same time guided by our conservative investment philosophy. Okay, so we're focused on buying apartment buildings and townhouse complexes in strategic markets across Canada. Our current focus is British Columbia. We like, in particular, the BC interior, places like Kelowna. We like the Vancouver Lower Mainland, and we also like Vancouver Island, especially the Greater Victoria area. Now, as I mentioned, we've been operating as Yorkton Group since 1989, but in fact, we bought our first apartment building going all the way back to 1984-85. Okay, so we've had we're very strong. The Yorkton Group of companies is very strong in rental properties, and the property management team from the Yorkton Group is managing the properties in the Yorkton Equity Group, because the Yorkton Equity Group is both operationally and financially backed by the Yorkton Group of companies. So over the years, we've developed some criteria when it comes to acquisitions. For example, we like to buy properties with greater than 1.15 debt service coverage ratio. We also like to keep the total indebtedness of our entire portfolio to be less than 70% of our gross book value. So of course, we would deploy a risk-averse business strategy, and we are, the vast experience of the Yorkton Group of companies is there standing behind the Yorkton Equity Group to support its growth. Okay, and Sid touched on this. Right now, we have historically low interest rates. Today, we can get a CMHC insured mortgage for as low as 1.5%, whereas 2 years ago, we were paying 3% or even higher. Today, we're finding an increased supply of multifamily residential rental properties on the market, so we can pick and choose, what building, suits our criteria. So we can pick and choose buildings. We're also seeing, as Sid touched on, mass immigration to Canada. This year's target is 440,000. We expect similar, 400,000 plus immigration levels over the next 3 to 5 years, as announced by the federal government. We may see some small increases in interest rates, but for the most part, we expect only small increases in the interest rate. And regardless, even if the interest rates, goes up a little bit higher, Yorkton Group of companies, we've been around since we've been involved in rental property since 1984, 85. So we have seen interest rates up and down. We've seen recessions and booms. Whenever there's a recession, Yorkton Group buys, and we have dealt with low and high interest rate environment. So the interest rate environment doesn't really impact our business growth model. We will continue to grow aggressively our business activities over time. This is one of the properties in our portfolio. Is a two-story covered shopping mall with HSBC as the anchor tenant. It's a covered shopping mall. We also own the parking lots behind here. Now, this whole complex was rezoned back in 2014 for a $200 million mixed-use shopping mall with up to 30-story twin towers. So this property is in our portfolio. Incidentally, this property brings in about $500,000 a year in net operating income, and this property is 100% owned by the Yorkton Equity Group. Our plan for the Yorkton Equity Group is to hold this property perhaps for the next 5, 6, 7 years, and then sell it, and then use the the expected substantial profit to go and buy additional apartment buildings and townhouse complexes. Here's another property in our portfolio. This property is located in Langford, Victoria. Langford is it's in the Greater Victoria area, and Langford is one of the fastest growing cities in Canada. Last year, it was ranked as the most livable city in Canada. This property has 16 units, 15 apartment units, and 1 commercial unit. And Victoria is growing very, very rapidly. Langford, in fact, is growing faster than Victoria proper itself. Another property in our portfolio is this property in Kelowna called the Larson Place. This is a 19-unit upscale townhouse complex with in-suite laundry, fenced backyard, 2 parking stalls per unit, and this is fully tenanted. The cap rate on this property is 4.33%. Now, when we bought this property, we bought it well below the market price. The comparable unit price for a property like this is $675,000 per door. We were able to buy it at $468,000 per door. The rent is also currently below market. When we bought it, around $2,000, whereas the market rent is around $3,000. So this cap rate here has the potential to increase significantly over time. And as you know, Kelowna is a rapidly growing city. Another recent acquisition is the Yorkton 108 project. Yorkton Equity Group has acquired a 25% interest in this 193-unit development project. And just to give you some background on this project, the Yorkton Group of companies purchased this property for about $8.1 million back in 2018. We assembled this property into a development project, and then it had it appraised in the same year. It came in at $12 million. And then in December 2020, we achieved third reading approval. Once a project has a third reading approval, it defines all the criteria required for the project to be approved by the City Council. Okay, so you can see how we've increased the value substantially within 2 years here. Okay. The Yorkton Group is very good at buying and rezoning properties to much higher densities. So 10 to 20% of our acquisition, we expect that we will be rezoning to much higher densities to sell to generate extra profits for the Yorkton Equity Group. Another recent acquisition is the 62-unit complex in Northeast Edmonton. This property sits on 2 acres of land, so obviously it's very ripe for rezoning to much higher densities in the future. So this property is 100% owned by the Yorkton Equity Group as well. And just to give you some background on the trajectory of our stock price, we started trading back in November 18th of 2020. And actually, we started trading on November 20th, 2020. Our pre-listing private placement closed around November 18th, 2020. And as you can see here, we announced our business model to the world back on January 27th of 2021. And you can see here, as soon as we announced our business model to the world, the stock went up to 35 cents, then all the way up to 45 cents before settling at 44 cents. From here to here, we had no news announcements. Right over here, we started our second private placement at 25 cents. And as you can see, there was some profit taking. Our pre-listing private placement, the 4-month hold, also ended here, which again resulted in some profit taking. Since then, the stock has gone up to around about the 35-cent mark, and it's been trading somewhere around between 30 and 35 cents historically. Our 50-day average for the stock price is around 33 cents. Okay. Right now, there may be some ups and downs in the stock market, normal movements in the stock price, but the long term is that we want to rapidly grow the net asset value so that the stock price can also increase, because usually as the net asset value increases, we would expect that'll be reflected in the stock price. So currently we have a private placement where we're raising $2 million. Each share that you buy is 30 cents per unit. When you buy a share of this stock, you also get a 45 cents 2-year warrant with the 80 cents acceleration clause. And this is RSP, TFSA, etc. eligible. Here's our leadership team. I'm not going to go into too much detail about the leadership team. I'll mention that Bill Smith is highly respected and well known in Alberta, especially. He's been a mayor of Edmonton not once but 3 times, and he's been a chairman and senior vice president of a number of publicly traded companies on the TSX. Ben Louis, he's our CEO, director, and founder. He graduated from the University of Toronto with a Bachelor of Commerce degree as well as a computer science degree. And he's been involved in many different areas in the business world. He had his start in real estate back in the mid-1980s. Okay, myself, Reg Leonard, I have a Bachelor of Science degree from the University of Alberta. My own background is in the securities industry. I also specialize in project syndication and marketing. Diet Mack is our CFO. She has about 15 years of experience in the public markets, companies trading on the TSX specifically. Jason Thies is our director and audit committee chair, and Mark Wilbert is our director as well. Here you can see some of the projects of the Yorkton group of companies, the management team, what they have achieved over the past, going all the way back to the mid-1980s. You can see here, we've done very well for our investors. This project here, Yorkton Place, is another one of those buy, hold, rezone, and sell, which Yorkton Group is very good at. This project here, the project duration was less than 12 months. All the investors got a 20.45% annualized return. In fact, the majority of investors were only in it for 3 to 6 months, and they likewise exited with a 20.45% return on investment. Okay, this is our Benfit project by the University of Alberta. This is a multi-award-winning condominium project. So why invest with the Yorkton Equity Group? Number one, we're focused on revenue-producing hard assets, namely apartment buildings and townhouse complexes. That's our focus. Leverage in real estate is very, very important. With a 25% down payment, a mere 25% increase in the property's value results in 100% ROI. Okay, and as we all know, especially in the Greater Vancouver area, property values over a 15-year time period can go up as high as 500%. Okay, every 5 years or so, we will refinance, take out equity on our properties to reinvest to buy additional rental properties. When we sell a building, we have to pay capital gains tax, but when we have a rental property and we refinance, say every 5 years or so, we pay no tax, and then we can use that equity that we take out to reinvest in additional rental properties. Okay, we have a hassle-free investment model with an experienced management team with over 30 years of experience in real estate. We plan to be diversified geographically as well as by product mix. We like to invest in cities with rapidly growing population, strong population immigration, job market growth, etc. Now, a key point is, as I mentioned earlier, Yorkton Equity Group is both operationally and financially backed by the Yorkton Group of companies, okay, to fuel its growth. And once again, we are not a REIT, so we have the full freedom to reinvest all of our profit to grow the net asset value. And as I said earlier, we're laser focused on rapidly growing the net asset value of the portfolio. And as I said earlier, 10 to 20% of our portfolio, we will look to rezone to much higher densities so that we can sell the property and generate extra cash for the Yorkton Equity Group. Now, this graph here shows here, say, a typical property, say this year, we bought a building at, say, $10 million. We only put 25% down to buy that particular building. Over time, you can see the debt going down in value exponentially, and you can see the building value increasing exponentially over time, okay? Now here you can see the property doubling in 30 years, okay? And if you look at a place like Vancouver, for example, or Greater Vancouver, you can see a property that was purchased in 2005 today will be worth about $2 million. So it's gone up around 400%. Now this is the entire market, but specific strategic locations, we've seen as high as 500% increase in the Vancouver Lower Mainland over the course of about 15 years. Okay, so if this was a graph about depicting the Greater Vancouver area, the dotted line here, doubling, would be somewhere around about here. So it'll be a very, very steep increase in value. This graph is really critical to understand. Okay, this is the beauty of buying rental properties, because your tenants in these buildings are always paying down your mortgage every single month. Okay, and in the meantime, your debt is decreasing exponentially, and your equity is increasing exponentially over time. As well, the building is going up in value as real estate does over time. Okay, so I've wrapped up my presentation. If you have any questions, you can contact me directly. I'm available 7 days a week for phone calls, and I'm also available 24/7 by email. You can also email our investor relations department at investors@yorktonequitygroup.com.
Thank you so much, Reg. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So one of the things that we always look, for us, when we do our due diligence, is management team. And for Yorkton, one of the things that jumped off the page for us was Ben's strong background in real estate. So Ben, if you don't mind, I would like to bring you into the call, and then maybe quickly, if you can talk to us about your background, especially in real estate, that would be good.
Okay, yeah. Thanks very much, Sid, and thanks, Reg, for the presentation. Basically, we started our real estate company in the 80s. Well, the Yorkton Group International was incorporated in 1989. So we have been in the real estate business for over 30 years, and we're a full service real estate company involving development, investment, and project property management. So we have lots of experience, and our expertise is very diverse. And last year we decided to go public. So we set up this public company called Yorkton Equity Group, and now we're offering a very exciting ground floor opportunity for the investor to come in at a very low price. And then our plan is to grow the business and grow the portfolio. And our target is to grow our asset to $5 million. And as soon as we reach a $1 billion net asset value, we may consider paying out dividend and may consider to become a REIT, but we'll decide by that time.
That's a very important point. Raj also mentioned that you are not a REIT at this moment. The idea is to acquire properties and grow your NAV. So when it comes to capital gains, what are you betting on in these markets? Is it a reduction in cap rates leading to higher property valuations, or your ability to acquire underperforming assets and increase their valuations? So property specific valuation increase.
Yeah, our plan is to we're a growth stock. Our plan is to continue acquiring property, and our focus is in residential multifamily property. And our plan is to do equity takeout. We finance our properties mainly through CMHC, and that's what Reg mentioned. The current CMHC mortgage rate is below 2%, which is very attractive. Where the cap rate is well over 3%. So there's a very healthy spread between the cap rate and the mortgage rate. So it gives us a very strong positive cash flow. And as time goes on, rent increase over time, and property value increase over time. And our reason for the increase in value is the inflation. We expect that a certain level of inflation will be coming as a result of a number of reasons. One of the reasons is the currency devaluation, as the federal government, they print money basically, so to help the COVID crisis. So as a result, we expected a certain level of inflation. We all know that real estate is in inflation hedge. So we expect the value of real estate go up rent will go up. And as rent go up, the cap rate will increase. And as cap rate increase, because the market cap rate, like for example, in Vancouver area, the market cap rate right now is about, maybe 3%, and the mortgage rate is below 2%. So it's a healthy spread. So if rent continue to go up, the cap rate will also go up. But because of the market cap rate is 3%, so there's a pressure to bring down the cap rate. And as a result, the value of property will increase because of the cap rate. Okay, so when the value go up, and that's the time that we can refinance and do an equity takeout from the property, and then use the cap rate, use the equity takeout money to reinvest and keep buying the properties. Now, one good thing about equity takeout is we can pull out money tax-free. We don't need to pay tax on equity takeout. Whereas if we sell the property, the capital gain tax will kick in. So that's the beauty of real estate investment.
Okay.
And we can another thing is leveraging. Leveraging is is very effective to make the to grow the portfolio over time. So I love that chart that Reg presented about the equity and mortgage pay down chart.
We have a question here for Ben. It says, can you identify 2 real estate projects in the Vancouver area that you completed full cycle before launching Yorkton Equity Group? So I mean, Ben, we can perhaps talk about the Abbotsford Valley View Terrace project, and maybe the Yorkton 108 project, where it's currently, we're getting a lot of buyers requesting to provide information because they're interested in acquiring the 108 project. So maybe you can focus on the Valley View Terrace and the 108 project there.
Yeah, in the back in the, I think around 2000, 2004, 2005, we have done a condo conversion, and we acquired a property, a building, and they're all stratified, and we convert them into individual condominium, and we sold them to investors. And the investor back then paid about, like $80,000 a unit for 1 bedroom, and about $120,000 for 2 bedroom. And now today it worth way over $300,000. So for investors that buy a condo, let's say $100,000 condo, all they need to come up with is only $25,000 as an investment, as a down payment. And imagine with their $25,000 and go all the way up to pretty well, but today the mortgage is pretty well paid off. So that $25,000 will become $300,000 or more. So we can imagine it's way over 10 times of the return. So that's the beauty of leveraging in real estate. And the Yorkton 108 project, I think Reg just elaborated a little bit already. We bought the property. We bought 4 lots, 4 residential lots, and each lot, we pay about $2 million. So total of about $8.1 million. We pay $8.1 million, and then after we assemble the 4 residential lot together, we did an appraisal, and the appraised value came back at $12 million based on a development project. So, and then we went ahead and did the rezoning and got the 3rd reading approved within 2 years time frame. And after the 3rd reading approval of the rezoning is achieved, the value, we did another appraisal, and the appraised value went all the way up to over 20 million. Yeah. So you can see the appreciation in real estate is quite substantial. So that's the beauty of real estate investment, and that's why we've been very successful investing in real estate. And we have seen our investors, our partners that joined us to invest in real estate, they became multi-millionaire in just a few years with very little down payment.
Yeah, and I also want to add, because this person asked about the fact that the projects that we have exited. Another project I want to perhaps bring to your attention is the Yorkton Place project that we wrapped up in 2018. Investors' holding time was less than a year. Some majority, I would say, was between 3 and 6 months hold, and they all walked away with 20.45% return on investment. We bought the land for 10 million, we rezoned it, and then we ended up selling the entire project for 16 million, and that generated 20.45% return on investment for our clients. So this is an example of a full cycle exit here. Okay, investors came in, they invested, and they all walked away with a 20.45% annualized return. I see there's another question here.
Ben and Reg, so you have 5 properties in the portfolio now. How many do you plan to acquire this year?
Yeah, excellent question. We like to have about 10 properties in our portfolio by the end of this year. So we're targeting acquiring at least 5 more apartment buildings and townhouse complexes. We're so far, like, we've over the past 7 months, we have acquired 5 properties into the Yorkton Equity Group portfolio, and we want to continue with that momentum. So right now we're doing, we have, as I mentioned, a non-broker private placement. Our next private placement, we expect that to be a broker private placement, where we're looking to raise somewhere between $10 and $15 million. And remember that even with the $10 million funds raised, because of the leverage in real estate, we can buy $40 to $50 million worth of rental properties with that $10 to $15 million raise.
Okay. Now, all these target properties, are they all potentially underperforming, undervalued assets, or do you also look at stable, properties that are operating, with stable operations and everything?
Yeah, we like to buy properties in strategic locations, in locations that are in cities that have rapid population growth. So we always like to buy undervalued properties wherever we can, a lot of the times when you buy property, you already know the amount of money you're going to make because you're able to buy it at a significant discount in some cases. So our primary focus is to buy undervalued properties in strategic markets. Ben, do you want to elaborate on that?
Yes, it's a very good question, because one point is Yorkton Group is a real estate developer. So we have a crew of, renovation crew, maintenance crew, and we can pick up undervalued property, which is, neglected and need the work. So we can come in, we buy at a very low price, and then we can, mobilize our crew to fix up the property and increase the value substantially. So we look at all kind of property, whether it's undervalued or good potential. So we're here to look for all of opportunities.
So how big is the company, Yorkton, the entire Yorkton Group, and this publicly listed company? How many employees in total?
Well, in our company, we have probably around, I think, 40 employees.
Okay.
And we have right now about 30-40 companies altogether, like for each project, real estate project in the past and currently. So
okay, just one final question here. What's the status of the current financing? What will the funds be used for?
The proceeds of the capital will be used for acquisition, for buying properties, and financial. Like we're a financially healthy company, and Yorkton Equity Group will be financially backed by our mother company, Yorkton Group International Ltd.
Okay, fantastic. So I don't see any more questions, gentlemen. Did you have any final thoughts?
So I want to emphasize once again that we're really laser focused on growing the net asset value as well as the net operating income. We're buying properties in strategic markets with significant upside potential. So our focus is rapid growth of the net asset value, but we're still guided by our conservative investment philosophy. Okay, so we want to grow rapidly but securely.
Perfect. Thank you so much, Raj and Ben, and also to everyone on the call for taking time today. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel and also sign up to be a member of our platform, researchfrc.com. You'll get alerts when we publish new reports. You can access the full initiating report we published on Yorkton Group. And of course, you'll be able to see a list of top picks. Thanks again and wish you all the best and stay safe.
Thank you, everybody.
Thank you.